Well, look, there's Rod. Rod, I hadn't seen you in a while. How you doing, Rod?
Finally getting back amongst the living in a regular shift.
Oh, wow. Okay. Well, you sound good. You sound good. And Rick is in here too, which is really good. So good to see everybody. Kind of cool, right? Wow, the market. What about this, huh? Down over 2% last night, and then boom, baby, boom. That's why, you just can't figure it out. You just can't figure it out. What's going to happen? Up is down, down is left, and left is up. And wow, it's just crazy. So the more relaxed I become when I, realize that I can't uh, time the market. I don't know the market. I just go with it, baby. Whatever it does, let's just go with it. But you can see we're over the 15-minute range. We are above the overnight high. We're above VWAP. We're above everything. And we're stair stepping up. Maybe we're in a little lunchtime chop now with our AD. AD is still weak, though. Check it out. It's negative 193. And the E-mini's down just fractionally. NASDAQ doing much better, up over 0.5%. Well, kind of cool to just see everything, how it's doing. And I tell you, I don't know. Can you imagine the president of Ukraine, man? He's like some of our early leaders, right? U.S. says, hey, baby, we'll come get you out. He's like, well, you're not getting me out. I'm staying. Don't give me a ride. Don't give me a lift. Give me ammo, baby. I love that dude. So that's good to see. So Putin's got a fight on his hand. I pray for the people of Russia and Ukraine and everybody around that area, because it's, the Russians, they don't want to fight. You got a madman leader, invading countries and doing all that. I just wish there was more we could do. I mean, we do pray, but I wish we could send them stuff, help those guys out. All right, so let's see what our big green mustard looks like. See if there's any surprises here. Well, I'll be darned. We are at the point of control, the higher area here of our fair value zone is here. So we would expect a little bit of resistance in this area. It looks like we're, what's the word, capitulating? Is that a good word? Around that point of control. So, when I look at this, what am I thinking? Well, I don't know, it's just fairly priced. It's at the point of control. So, I can't really tell. I mean, we may go here, right? Get back down to that area, but everything looks kind of good, I think. Just fairly priced, which is good to know. I just love how our big green monster tagged the low there. Look at that. I mean, it just can't get any better than that. And remember, tomorrow's the first day of March, so we'll redraw this tomorrow. Wouldn't surprise me just seeing how this level is working here to see this go to here. That's kind of what that looks like to me. But we'll see what happens tomorrow. Now let's go to our NASDAQ. What our NASDAQ does. NASDAQ. We're above our point of control. So we still got a little more room we could run in the fair value zone. So, this looks a little more bullish than the E-mini chart to me. Know what I know? No, nothing. We just play this game every day, don't we? All right, so now, that's our little thing. Let's go look at our ski driver. And we really need to update this chart. We don't have enough stuff here. We need to do some more strikes because we don't have enough. See, I don't even have a 5-2. But I just go by the one that's the lowest I could possibly go to. So we'll say 114. If anybody's updated that, that'd be great. So we can get a real number. So I'll say it's 114. Just for the heck of it. Today is 2/28. My mama's birthday. Well, not really. She was born on leap year. So she was born on February 29th. She died like when she's 20 years old, 21 years old, which means she was 82. But she only had 21 actual birthdays. Isn't that cool? 21? 20. She had 20 extra birthdays. She died at 80. Yeah, 20 extra. So, we expect SPX to go back up and this to normalize. We just don't know when, right? So that's why, even so, you could say, well, if you're going to do a long-term put on something SPY or micros or E-minis or something of that nature, it's probably a good day to do, a good time to do a 45-day trade, right? Because we expect this to normalize. We expect the market to go up for that to normalize. We just don't know the time. So I'd give me some 45 days or so to do that. Should be kind of good. So let's go back here. For those of y'all that haven't been with us in a while, I'll tell you what we've done. We've now got all of our accounts. Well, not all of our accounts. We've got some of our accounts. Well, we've got a few of our accounts that are all combined over here now. So we're doing, we got, I think, 3 accounts. Well, there's 4, I guess, but one of them doesn't have any money in it. I may add some to that later. So we're up $2,900 on the day. Looks really, really good. And the problem is, I don't say it's a problem for those who don't have a risk tolerance, but in a single day last week, we were down $10,000 in a day. So you got to, with what we're doing, you got to figure out what your risk tolerance is. That's within mine, which is kind of crazy, I guess, to be down $10,000 in a day. But this account now is worth what? I think we got 153,000 altogether. Yeah, 154. Wow, moving on up. So doing quite well. All right. So today, what do we want to do? So as you know, I went on vacation and did not change anything really. I didn't have big epiphanies. I didn't have big revelations. I didn't overthink things. I like where I'm at now. Our deltas are 333 positive. Look at that nice, beautiful, gorgeous theta. And look at that Vega, y'all. When you got Vega like that, man, I mean, down moves don't kill you so much, really, with the increase in volatility. So our Vega is really, really nice. So let's go and break these accounts down a little bit. So let's see if I can remember which one it is. Pattern day trader. Let's see, here we go. This one. Okay. So this account, it's got the bonds in it. Then it's got the TQQ in it. And then we sold covered calls on those 377 shares, which is just, I just love the covered call on TQ and UPRO. Looks like pretty good. The trade that I've been really disappointed with through all of this is our VIX hedge. You got 14 days and 50 days on that. I've not even reestablished the last couple of them because the VIX is so high now. I got a little bit disgruntled with VIX. E-minis, we don't have much stuff on them. We've got 2 after harvest black swan hedges. That's all we've got on there. And then we've got our micros trades. Now let's talk about our micros trades for a minute. It may be better to put these into groups, because the micro trade's been the greatest thing in the history of mankind. Well, maybe that's a bit. So you see, when we're losing a bunch of money on our TQs and we're losing money on all the other stuff, look at this. The micros have been our saving grace, bringing in $4,000 just this year. And we're down 12 on everything else, but that's been really, really, really good. So let's think about that for a second and just put it in my groups a minute, because I don't want to have the situation that I had before. And the situation that I had before is, even though it was a great trade, I was almost at a point where I was going to have to roll some unprofitable naked puts. I didn't like that. I didn't like that feeling of me going, hey, these things are going to be down. Now, if you recall, on Friday, we got was it the big up move Friday or Thursday? And I was able to close all those naked components that expired or would have expired when today. I was able to close all those for profits. It was really, really, really cool. So I think what I want to do, let's just look for a second. I mean, we've got one here that's 18 days away, right? And so we've got the naked component, and then we have the debit spread. And remember, this is up 41.25, it's up 39%. Now, when this becomes 50% profitable, it totally pays for this put debit spread, which I like. Now, the issue here is the put debit spread is also profitable. So this entire trade is up $80, which is kind of cool. So, what you could do, you start, I don't want to overthink it, right? Because we need to have some plan in place, but the reasonable thing to do seems to me like maybe we manage the short component, but then because we're profitable on this and we don't have enough to totally pay for the put spread, maybe you take the whole thing off because you got a nice profit, 82.50. And I know the put debit spread is there to provide us a little protection in the end. But now, do recall the one thing that I did do on vacation and that I like, so that I don't have to worry about the hedging part anymore, is I did the hedge fundies excellent adventure. I did the 55% into TQs. Now, I know hedge fund excellent adventure is G-Pro. I did 55% TQ and 45% TMF. So that's the humongous supposed downside hedge. And so now some of these others are less, a little less important. I still like doing them. So what do we want to do here? Do we want to take our profits on the whole thing and close it on this nice up day? Well, we're flat on the day, but it's kind of cool that we squeeze profits out of these. So let's look at some of the other ones. And I've really got everything nice and neat now. So this one's up 30%, but it's only up $15 on the whole trade. It's got 45 days to go. So this one is too early to manage. So I'm kind of thinking in my mind of minds, hey, maybe we do need to do some type of 21-day management on these things. So my TQQ covered calls. Here's a 111 that's up 145%, up 81. See how much this got in there. This is 18 days to go. So, the whole thing is profitable. It's another one that you start thinking, maybe I need to start taking some of these off. Let's take our profits. The profits from this one is not coming from the naked component of the 111. It's coming from the put debit spread. So interesting there. So we got options, y'all. We got all kind of options. The bonds are up nice today. The TQQQ Empire is up a good little bit today. Of course, this is P&L year to date. It's a fluctuating asset, baby. I mean, it really makes some moves. There's my stupid big say. So as you see, I don't have a lot of 111 trades on to begin with. So let's just kind of look. We got a couple of BSHs that are doing good. Let's go back to this one. It's up $80. So I like the idea of starting to take risk off. And I could take just the naked put off, but as you see, we've only got $40 here, so it's not quite enough to pay for this put debit spread. But this put debit spread is already profitable. Interesting, isn't it? So let's close one of these. Let's just do this. I like the idea of beginning to manage these a little early. I don't want to have those. I don't want to be a nervous Nelly. Not that I was a nervous Nelly, but I don't want to, have to start worrying about this thing toward expiration. So let's just do this. Let's see, buying power effect. See if we can get out on one of these. How y'all doing? Hope y'all had a good weekend. 13.25. Be greedy, Bobby. Be greedy. Get me out, baby. Let me go to 13.25. Look at how stupid. There we go. So we're out of that. So we're out of that part of it. All right. So now could go and take this other component off. Now I know, this is part of our hedge, right? It's kind of groovy to leave it on, but I like stuff being able to pay for itself. So we could sell this at 18. So remember, we paid $10 for this. Remember, that's how we did this. And so if you can close it for 18, that's a profit. Let's take our profit. It's going to make us go to our detriments. Remember, you start going this way and you go, I got to make it to my detriment. Oh, we got to feel. Now, that's what I like. So take one off. Now, remember the good old days, right? Remember the good old days where we would, put one on, take one off, put one on. Remember, we'd sell a put and we take put off. We sell a put, take it. Well, we did the same kind of thing here. So we don't have that issue of us running out of buying power here. So I love the 1-1-1 trade. I just think we need to be a little careful when it starts getting around that 21 days. And it's good for us to learn together, right? Always be learning. How we're going to manage stuff. And why don't we do this now? So now let's go to the other account and let's try to find us one that we could put on today. So I got plenty of buying power here. Let's say I don't think I got many positions here either. So I got a 45-day one. I got this one. So it's so much harder for me to figure out what. Let's say this one's up only. My percentage. Oh, that's percentage of profit. Okay, here it is, 35%. So that's up 36 to 37, 16.25. I'm trying to figure out what's profitable and what's not. I was like, that's up 37, but that's down. So it's so much harder to do here. It's crazy. All right, let's try to build another one. And we might try to see, I've asked Tom King if he would maybe come on with us and talk about the 1-1-2, but let's build out a 1-1-1 first. So let's trade this, go to the table. I like them around 60 days. That's where I like 60-day stuff. So we're going to do a long put vertical. Points wide. And we want one where we could do it for, God, it's been so long since we put one on. For $10, right? 10. Look at these options, man. I'm able to go way out of money. And even though it's on an update, it's kind of cool. But you still, you see these prices and these options are just, whoa, baby, here up there. So here we go. There's this little option right there to do a put debit spread. So go down one. Now we'll go up one. Pop it up to 10, see if we get filled. Yeah, we're filled. All right, so then, now here's how I think he's doing the other one, right? Is that he's going, I just don't know if I want to do this yet. Hold on a second. Let's look at one more thing. So then we would normally go down here and we'd sell one for $20 or maybe here to pay for that. Who is printing something on my thing? So what he's doing, let's see how much firepower that takes. we do that, that takes up buying power of $350 is what it says. But what he's doing, I think what Tom's doing is he's saying, hey, wait a minute, since we, in these tumultuous times, what about if we went farther out? Right? And we did something maybe around, and he's probably going to go closer to the money. But what if he did, two of these instead of, isn't it crazy? Look at that. If you did the 1075, you're way farther out of the money, and then you do two of them. Right? That's extra risk because you got two options on. What's the buying power reduction on that? 447. Interesting, isn't it? I mean, it really is interesting because you say, well, yeah, it's not much buying power more, and I'm able to sell that a lot further out. So rather than selling the 8% probability of being in the money for $20.50, I'm going out and selling the 4% probability of being in the money for, roughly the same credit. Kind of cool, isn't it? So that is a 112. Now, of course, you could do it closer, whatever. That's kind of cool. So that's a 112. 112, as I understand it. And y'all see the reason why. Where the market is crazy it is, you can collect the same credit. Now, the problem is you're using a little more buying power and you've got an extra option. So that's going to be, a little more commission as well. 112 trade has been very successful. Great trade, right? Well, and Rod, the thing is, so is the 111. The 111, y'all, has been just phenomenal. I really don't think I've taken a loss, even on everything that has happened in the market. I don't think now it was about to a point that I was going to be losing on some of those, but I was just going to roll them out in time. And I've ended up not having to roll them. So it's been a great trade. All right, so let's go into the other account. Let's do one of those. Let's do that. Not 30 days, but today. Let's do it today. Let's move that on the side. So does anyone have a question about the 112 and why you would do a 112? You start looking at things, you can say, well, what we'll do it on is based on, expected move maybe, or the VIX, or whenever you're at a point where you think that these moves are really going to be big. Let's see that. Let's see. 477, 28%, 20%, 60 days, plus or minus 410 points. Right? So, let's try a 112. So we did the 40, 70, 40, 20. 40, 70, 40, 70, 40, 20. 20, 70. So we're going to buy that one. Hold your little controller down. I'm going to sell that one. I'm so close, y'all, to having my taxes done. Unbelievable. So there's that, right? So let's look at the buying power reduction on this with the whole trade, since we could do the whole trade over here. And then let's sell like we were going to do a 111. I look for a 30-point wide debit spread in ES that costs $6, and I go out and sell two far out of the money puts around $10 each for an overall credit. 14. Cool. Let's see. So you do a 30-point wide debit spread in ES. Let me think about that. Cost $6, and I go out and sell two far out of the money puts around 10. You greedy son of a gun, you, Rod. You greedy pig. Capitalism, baby. It's a great thing. All right, so if I were to go and do the 20 here, $20 one, pay for my commissions here. So we'll be doing the 3,400. Right? So that'd be a 1050 credit, and it looks like it would take no buying power. Wow, how about that? Let's edit our trade. So we'll take this one off. How do I take that one off? Good question, Bob. All right, so let's go back and do it now. This time we'll do the 40, 70, 40, 20. 40, 70 by 40, 20. 40, 20. There's a $10 debit. And let's go look for us, some money. So we were doing the 30, so 44. So go down and look for about 10 or 11 bucks. Right there, look at that. So we could do the 30, 50, or heck, just be a little greedy like Rod. Sell 2 of these. So you got to increase this one to 2. Look at that. Now we get a $14 credit. Look at that. Buying power reduction for me is 0. Our first 112. All right, so let's put that in our little thing here. So unallocated. 112 first. How about that? Y'all join me on my first one. But I mean, it makes sense to me, doesn't it? It makes a lot of sense. You're making that short naked component a lot safer. 1, 2, and we'll go first. And what I could see us doing, I mean, it makes sense to me, right? And Rod's doing it in the e-minis. In this account size, I like keeping it in the macros. And what would be great is if we could do it to a point where we're putting one on, taking one off every day. Kind of like we did with our short puts before. Kind of like that. So we got to build them up first. Got to build them back up. Now, another thing I want to look at. Just want to look, okay? Y'all don't crucify me. Let's just look. So we got our 1-1 in the deal here. What happens if you did start going? So let's see what our curve looks like. Curve looks like that. It's not that much because I don't have that many on now. But we see what our 1-1-1 trades look like. That's what we were going for. So what happens now when you go back to your table thing, you go to 60 days and you do a long call for? I'm just looking on the call side. I just want to see something here. Okay. So there's 50 points wide here. Let's move those strikes out where we could get that one for about $10. Look at that. Unbelievable. Look at the way out. So then what happens if you go, well, now let's try to sell something. What if we get a wicked rally? Well, you could do did I do 2 contracts over here? Or did I just do that as a 1-1-1? I bet I did. Hold on a second. I bet I can change that to 2 contracts. Y'all got to keep me straight. Darn it, I didn't do it as a, go back to my orders. Activity, field, debits. I got to do another one of these. No, I did do 2. I did do 2. Okay. We'll go back to trade tab. I'm sorry. Look at here, y'all. We'll go all the way up to 4,700. That's a long call vertical. And then if you wanted to go the naked component on this, on the call side, you could do it at 48.10 and do 2 of those. What does that look like? Excuse me. Don't let you do that trade with me. It's not supported. It needs to be supported. Let's see if we can see what it looks like. Here we go. Look at this. Look at us. Look at that. Now what kind of structure we got going on here? Cool. You got a call debit spread, and then you do a. So here's what I want to do. Let's model that in the other account. Let's see what it does. Let's do those same strikes. Building a little structure here. Y'all like doing this? I like doing this too. So let's go and look at the 4650, 4700. So we would that one. So, control key down. And then go down and first we do this in 112. Way out. 2 sell for 10. That thing. Two of those. $11 credit. See what the buying power reduction is on that. Yeah, I mean that's the problem, right? You're getting a $50 credit, and it's going to cost $2,000 in buying power. I don't like that. Now, let's think for a second. I wonder though. I mean, it says 1979 buying power. But I wonder, yes, if it's kind of like a strangle. Let's think for a second. It's kind of like a strangle, to where if we sell a put and we can sell a call with no additional buying power reduction. I mean, you would think it would do the same thing on this type of thing, right? Because it's a spread, which is defined risk. And then since we've already sold the naked put, you know, who knows? Who knows? Anybody know? You might know if it would really take that buying power, if they would realize what we're doing is kind of like a strangle. Interesting, isn't it? Well, that's not much of a credit, is it? $50 credit. Anyway, just something to think about. Something to think about. Because then you could start saying, well, on an up day, maybe you could do something on the call side. Now, Ken told us the other day he's tried it on calls and he didn't like it. He didn't like it. So maybe we just stick with what we know is the good old winner, and that's the 111 on the put side. But don't want to overthink stuff. No need to overthinking, because I've got it really. I'm really happy where I'm at now. I'm not over trading. I'm just letting my allocations work, because that's where money's made, right? So that's what I've been trying to tell my little Alabama class, is that you all are in here thinking. You just think. I know how y'all are, because I was one of y'all, right? And here's what people think. I'm going to be the, I don't know, so I know how people think, right? Man, when you start investing in trading, you go, man, I am going to be the stuff, and I'm going to be a stock picker. Man, and I'm going to get in there and I'm going to know my fundamental analyses, and I'm going to know my technical analysis, and I got an indicator that shows me exactly when to buy, exactly when to sell. And I keep telling them that's not how you're going to acquire your wealth. Here's where you're going to acquire your wealth, is in the allocation of assets and opportunity. That's where you make your money. Just so happens I was smart enough to put it in the SP 500 for many years, through ups and downs. And when everybody was crawling out of the door crying, oh, the market's down, I just kept on going. I just would not stop. So that's where the money's made, is you being an allocator of assets, an allocator of resources. So you have limited resources. We all have limited resources. Even Vladimir Putin has limited resources. That's why he's going after Ukraine, gives him more resources. So we all have limited resources, and it's how do you allocate those resources? So, I initially was under the 70% stocks, 20% bonds, we're doing what we're doing, but I kind of do like the 55% equities, 45% bonds, and then us doing our little trades, our little options trades around the side. I think that's going to be a super successful strategy. And the 111 is a very important part of what we're doing. So we don't want to take it for granted. And we don't want to necessarily mess it up and start doing it on the call side if you don't have to do the call side, because that's, maybe a little bit on the greed side. I mean, this trade's done remarkably well, and the asset allocation has not done, well at this point, but combined with the covered calls and everything that we've got as a part of it, I'm really optimistic that we've got something special here. So we'll see. Well, if it's not, it's not. But I really like what we're doing. And what I really like about it is I'm not glued to the screen all day. I was on vacation and I think I did one trade. No, I had to reestablish my covered calls. But the cool thing is, what I could have done on my week's vacation is not sold my calls at a 7-day. You know how I like doing it 7 days? I like saying, hey, baby, let's sell calls at 7 days. What I could have done is sold 14-day calls and just not even looked at it. So let's think for a second about the beauty of that covered call. Let's think about why it's beautiful. The more I think about it, the more I go, Bob, it's just great. Now, the covered call is not great if you're doing it on a stock that goes to zero. Right, we know that that's not a good play. But if you're holding at something that is your core position, and my core positions in my accounts that we trade together is TQQQ or UPRO, and I'm not concerned with them going to zero, even though the world says they can, and you blow up, and blah blah blah. I'm not that concerned about it, especially now that I'm under a 55% allocation of equities and a 45% of bonds. I know what people are saying, but Bob, there's no guarantee that bonds will do what they need to do in a crash. Well, okay. But I think if UPRO went to zero, or TQQ went to zero in a day, I think we get a really big, nice lift in TMF, and enough so that we're going to be just fine. We're not going to go out of business. That's what we're banking on. So if that's too much risk for you, I get it. You need to buy the SP 500 and just dollar cost average into it. But if you want to do something that's a little more fun, a little more exciting, then do what we're doing. 55% of your equities, 45% of your bonds, and then do a little hedging around the side, do your 111s, and do your covered calls. So I love the covered calls because what we're doing is we're selling a covered call. So for example, in that one account that I showed you, I've got 377 shares of TQ. And you go, well, Bob, yeah, but if you sell that covered call, you're limiting your upside. Yes, I am. I'm limiting my upside on how many shares? 300. If I sell 3 calls. But these 77 can run and do whatever they want to. They're not affected by my short 3 calls. And the cool thing is, on selling those 3 calls, I'm able to bring in a boatload of premium. I just like that, especially on something that you go, that's a core position anyway, that I'm going to be holding anyway. Why not turn it into a cash cow? I really, really like that. Now, maybe I'm missing something. You know, the cover call is one of the oldest option strategies known since they, invented the calls. Nothing revolutionary. But I like the fact that we sold it the other day. What did we bring in? On the other account where I sold 10 of them, I brought in $1.19 per contract. I sold 20. I brought in $1,200 into the account where I'm going to hold that asset anyway. That's sweet, y'all. $1,200 a week. It's nice. Well, what if my calls get totally blown out? The market goes up above them. Well, good. Because I've got 1,031 shares of UPRO. I'm still up money on something that I'm going to be holding anyway. It's really, really cool. I like it anyway. So, y'all got anything to add? I just love it. I love it. I love the 111 trade. The trade that has not lost yet. It's a great trade. And what we did today is we kind of implemented the 111, the 112 a little bit. Well, you know, it's just a variation. It's the same trade. It's just since we're in a little bit of volatile markets, we're getting a little bit away from the money. We're buying an extra, we're using a little more buying power, but we're taking in roughly the same credit that we would have taken on the 111. Fascinating trade. Fascinating trade. I really like how all this works together. So let's look at everything, how it works together so far. So here we are. Here's what we're doing now. We hadn't changed anything. The plan's still the plan, but it's worth going. So you got to figure out number one. You have a core. I kind of like having a core, right? So, and I'm really digging the 50%, 55% equities and 45% bonds. Okay. All right, then. So in my accounts, now you can choose whatever you want to. You can do Apple, you can do SPY, you can do whatever, but I'm doing UPRO and TQQQ. I'm doing the 3x leverage. So on the bonds, I'm using the 3x leverage TMF. Now, if that's too scares you, you could do TLT. You don't want the leverage component there, whatever's up to you. But if you're doing leverage on this side, you need to do leverage on that side. So if you've got 3x leverage on the left side, you need to have 3x leverage on the right side. If you're doing 2x leverage on the left side, then I would do 2x leverage on the right side. Now, make sure you even that out, because it would be horrible for you to have UPRO or TQQQ that's 55% and TLT that's 45% of your bonds. That is not adequate. That is not sufficient on your bond side. So if you're doing 3x on the left side, do 3x on the right side. All right, so that's a core. Then we have to figure out what is our rebalancing strategy. Okay, there's a couple ways of rebalancing that we've used. We use our AIM spreadsheet. Okay? It tells us when to buy or sell. And I'm looking at it less and less, y'all. I'm looking at it less and less. Less and less frequently, I'm saying. Less and less frequently. Or if you sit there and go, AIM is a little too complicated for you, you don't want to start converting shares to cash, then what you could do, like they kind of did in the hedge fund excellent adventure, is you could go, I'm going to do a quarterly rebalance. Now, I kind of had my kids in college to do a back test on some stuff, and it was kind of funny, what they saw. They did a quarterly rebalance, and they also ran AIM otherwise, other than at the end of the quarter. And that worked out really, really well. So you can combine those, you can do one or the other or whatever. But you got to come up with what's your rebalancing scheme. You could do AIM every month, check it once a month and rebalance, convert some shares to cash, buy some others. Or you could just say, hey, I just want to open this 4 times a year. I'm just going to rebalance my allocation of 55% equities, 45% bonds. I'm just going to do that quarterly. Just do that quarterly. So then What else we got over here? So then it's kind of cool that we do covered call just to bring us in some income, right? And it's kind of a partial hedge, but it's just, you know, now it limits your upside. I got it. Limits upside, but I love a covered call. I just, you know, am I going to do it every week? Not necessarily. But there's a lot of weeks in a $100,000 account. I'd love to bring in $1,200 a week. Nothing wrong with that. Nothing wrong with that at all. So what else we got here? We've got, now after you do the color call, remember you saw me do this the other week when I was worried. I took my covered calls and I bought puts in the same underline, and we call this a collar. The combination of the two, right? Where you're selling the call and you're buying the puts. In other words, I want to limit my loss to the downside, and I'm going to limit my profit to the upside, so that, you know, I only got a little bit of deviation where I can make money or lose money here. And we did that the other day when things were really shaky. So you got the collar as part of what we do. Now, let's don't ever forget, we love the little black swan hedge. We love it. Now, the cool thing is you can still make lottery type returns to the black swan hedge. The issue is, I don't know that it's as important when you go down to a 55-45, but I like having some of those on there, and we'll always have some of these going and working. No big deal. Black swan hedge. Then we like our 1-1-1 trade. And keep in mind, the 1-1-2 is not a new trade. I mean, it's not like we're adding to the plan. It's just a variation. All of these are the 1-1-1 trades. And that trade has been the best one in our bucket for quite some time. Great trade. Now, if you do nothing but the 1-1-1s, you're doing fabulous. You know, you go, forget the core, baby. I'm just going to 1-1-1 it. Well, I kind of like having the diversity of strategy that we have. And I think the diversity of strategy is going to be really strong going forward. So we got the 1-1-1. We've got the VIX hedge. I'm a little disappointed. I'm still going to do that every month. You know, I don't know. I got them on now. Been a little disappointed in their performance, but they're there. So we've got, let's put our spreadsheet in here. Our spreadsheet, we talked about AIM and rebalancing, but our spreadsheet is part of what we do. And it will allow you to do either or. It'll allow you to do AIM or it'll allow you to do rebalancing. Spreadsheets will be part of what we do. We got the big green monster, which is our attempt at some type of technical analysis that works really good. I think it's one of our strongest things. Then we've got the screwdriver. It kind of helps us to make decisions. And we're not in the environment to do them yet, but we can always do calendars if we need some adjustments on our Greeks. Maybe I should put that in Greeks. We do look at the Greeks. Because I'm always saying that, right? Look, make sure that your theta is not negative. I mean, it's okay if it's 0 or you're not even selling options, but you don't want it to be negative because we don't want to have a burn on our account with a theta burn. So I always like to have a little bit of positive theta. And then we do watch our Vega to make sure our Vega is not excessive. I mean, on 100 and what's my account now? $153,000 with all these together. My Vega is -41. Are you kidding me? That's a nothing burger. It's a nothing burger at all. Now, if I forgot anything, again, the day's coming when I'm going to memorialize all this. I'm putting it all into writing. That day is not today, because today I've got to do K1 partnership type stuff. And unbelievable with the tax work that I have to do. But I'll be working on that. So we'll get all this down someday so we all have. But let's just show you something really quick. Let's just show you something. Let's go to our friend portfolio visualizer. And I know recency bias and the past doesn't indicate the future and blah, 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 blah. I got it. So we don't want to do optimization. We want to do backtesting. All right. So we're going to start in 2010, which is when we know we had all of our little stuff. Now, there are ways that you can, I'm not into doing, I don't want to go back further than 2010. 2010 is when TQs came out. It's when all our stuff come out. So let's keep it there. Let's keep it simple. So include year to date, yes or no. And let's say, I don't know what you want your number to be. What do you want your number to be? So I was like using, what if I started today, 10 years ago, with all my accounts here? Let's see, what we got 153. Let's say 153,000. Let's 153,000. All right, we're not going to put any money into it. It's just 153,000. How we're going to rebalance? And change this to quarterly. Quarterly rebalance. And readjusting of the benchmark, blah, blah, blah. Then let's do a benchmark. Let's do a benchmark. Let's say we were doing the S&P 500, which should be the exact same thing as the Vanguard 500 index. Right? All right, so let's rock and roll now, baby. So let's build our core positions. So our core positions would be, I don't know, let's do TQQQ in one account, okay? TQQQ, one account. Okay, and remember we'll do the 55%. And let's do the TMF, 45%. So let's put this one over here, do 45% there. And then let's build one that's UPRO. You see how UPRO is a little more diversified with UPRO than the TQs, right? And no guarantee that the Qs are going to do better than the S&P 500 over the next few years. So we'll do this with 50%. Okay, so now we've got quarterly rebalance. We're starting out with 153,000. If we would have started this in 2010. Now keep in mind, this is not going to show anything with us selling calls. It's not going to show the 111s and having the black swan hedges and blah, 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 blah. Okay, this is just if you're at work right now and you're, miserable in your job and you go, is there a reasonable something that I could do to get me out of this place so that I can go play baseball with my kids? Or I can help my dog outside who is under the house, who I think has been poisoned by one of my neighbors. God love it. I don't know how I'm going to get him out. He won't let me catch him. I've called the vet, and the vet's not there till later today. I can't even catch my dog, and I think he's been poisoned. So if you need time for all that, wouldn't it be good if you go, hey, baby, let's just roll it. Let's go 55 into one portfolio, 45 here, and just let this thing roll. And then I'm going to look at it 4 times a year. I'm not even going to do the Licello because I had my kids to do Licello. It looked really good. But let's just rebalance it quarterly. How am I going to turn out? And I don't care if you say it's recency bias, it's confirmation bias, all the biases that you gotta look at something. So let's analyze these portfolios. Okay. So here we go. Let's see how we do. So portfolio 1 is TQ, remember that. Portfolio 2 is our UPRO. And then let's see how these would have done. All right, so in 10 or 11 years, if you had done the TQ portfolio, your $153,000 would be $6.8 million. Y'all, that ain't bad. That ain't bad at all. So your compounded annual growth rate is 40.83%. Now, here's what I like, y'all. Here's what I like. Bobby, pass. I got it. You beat me up on you. Look at this max drawdown. 24%. The TQs has the high Sharpe ratio and high Sortino. And remember, the higher this ratio is, the better. Right? Look at the Sortino and the Sharpe compared to just holding and doing the S&P 500. The S&P 500, 1.03, 1.69. And if you had just done the S&P 500, now you wouldn't be upset. You would have 674,000. That's pretty good. All right, that's 14% compounded annual growth rate. Your max drawdown was 19.63. Now here's the part, y'all, that I think is phenomenal. And here's the part that y'all don't go out and tell everybody, okay? Under the UPRO, you get kind of the middle of the road, right? You get 32% compounded annual growth rate, which is really good. And you're going to end up with $3.5 million. But look at this. Your maximum drawdown is less or the equivalent of a drawdown in a 100% S&P 500 fund. Sharpe ratio and Sortino, and maybe we'll go over those a little bit later. And for those of y'all that have browsed my dissertation that's in the resources tab of our Discord channel, do a search for Sharpe, do a thing for Sortino, and I've got a really good breakdown of what those are. But this basically is telling you about your risk-adjusted return. In other words, yeah, you're getting all this extra juice, but was the juice worth the squeeze based on the risk that you were taking? So if this number is higher, these numbers are higher, that tells me that, yeah, the juice is worth the squeeze, baby, because my risk-adjusted returns are better than a portfolio that just holds the S&P 500. Can you imagine? So is Matt here today? Where's Matt at? I think so. But can you imagine, just for a second, there's Matt. Okay, I just move everything over to everybody. Matt, can you imagine, you're the dude that's just going, hey man, I'm gonna put 100% in the SPY, the SP 500. I'm gonna use a Vanguard fund, and I'm just gonna put my money in that and let it ride. That is a great decision, but that's a more risky decision than putting 55% in UPRO and 45% into TML. Can you imagine? Is this the Holy Grail? Is this the blah, blah, blah? No, I'm not saying that at all. But I'm saying that with this portfolio, looking at the previous performance and understanding all the biases that we are violating, I like it. I like it a lot. Now, cool thing is, if you can bring in some extra income by selling a call here and there, and you ain't got to sell. And the cool thing is, you ain't got to sell. If you got 1,000 shares, you don't have to sell 10 calls. Sell 2, sell 3. Just go, put in a little money there, and then you can do some hedging that'll maybe help this a little bit. But that is not really a drawdown that needs a lot of helping. So maybe the prudent trader going forward would say, well, screw the VIX hedge. I don't need the VIX hedge. Especially when I'm temporarily upset at the VIX hedge for not doing better of late. And of course, what we've had late is not a crash. It's supposed to be crashing. It's just not a crash.
Bobby,
yeah.
I think the VIX hedge fails us when the volatility is really high.
Yeah.
And things like the 112 become interesting because with the volatility being what it is, the further out of the money options have a higher premium, and given the deltas or whatever. So by making that 112 today, you got a little more bang for your buck, and I think that the 111 class does respond pretty good, not like the VIX, but in this middle area where VIX failed me too, but I got those inflection point spreads that I got from Coffin, and they did okay during the crash. They sit there and do nothing, and then when the market took a drawdown, they started kicking in. So there are other ways. VIX works great when the volatility is right to get in, and right now it's just not. It's not doing it. It's just not.
Yeah. It's really not. And because the VIX is still so high, that's not something that I want to put on now anyway. And that's why I'm like, there's no need to put it on now. VIX is already so high. And I know we want to be, mechanical. Hey, every 120 days, but we got to have, you can't entirely take the art out of this. But can y'all imagine if you did this portfolio, 55-45, you do a quarterly rebalancing, and maybe you throw in AIM, taking some for cash, whatever, every month or whatever. I mean, think about doing this with the 1-1-1. What a great little, I think it's a great little strategy. You want to toss in a black swan hedge here and there when it's opportunistic to do so? Yeah, go ahead. But when you do this, here's what I kind of liked about this allocation. Remember, I was 70-20 before, 70-20 and 10% cash. Kind of like this one because the drawdowns were much less. So let's go back and let's pretend now that we did the 70-20-10, right? So let's say we did the 70% UPRO, the 20% of TMF, and let's go cash 10%, like I was doing before. Let's just look at that. That's portfolio 40, 70-20-10. 70-20-10. I mean, it's still not bad, right? It's 32% drawdown. Now, of course, you got $7.9 million. But now it's interesting to look, though. Watch the Sharps and Sortinos. It's talking about how your risk adjusted returns, right, is lower than the other two portfolios. And y'all, we can sit here and just play with this and try to optimize this. You've got to do what you got to do. That's why I kind of like, hey, we're not going to make as much money as the 70-20-10, but I like that my risk adjusted returns, and it's almost the drawdowns are almost 10% different, 24, 34, 24, 8, 9% different. Now, what if you had done this under your pro? See what that would look, 70-20-10 there. Bob. Let's analyze that portfolio. Yeah, still got a 32% drawdown on UPRO. So what am I saying? I'm saying that I'm liking the 55-45, and especially for some of y'all that are at the cubicle every day and you can't watch this stuff every day. You go, well, I'm going to do 55-45 quarterly rebalance. I'm done. Maybe you don't have time to do your 1-1-1 trades. I got you. Maybe you ain't got time for your black swan hedge. I got you. Maybe you ain't got time for your VIX. I got you. Well, just do the 55-45 and let it run, babe. Quarterly rebalance. It's hard to, I know, but here's what I like about what we're doing. Now we're taking this and we're saying, okay, but let's not be as aggressive. Let's sell a call here and there. Let's, do a 1-1-1. Don't overcomplicate it, but I think this is a great strategy. Great strategy. So anyone got any questions about the strategy? Make it your own. I think when I do write it up, I'm going to say VIX hedge optional. It's not required. Right? I think everything else is now optional. I kind of just like the beauty and simplicity of this. And then go, well, if you can do some of those other things, that's great. That is awesome. Maybe you take your drawdown, instead of 20%, maybe you only go down, 5%, or maybe you don't have drawdown. Who knows? So you got to logically put into the place all the pieces of the puzzle. And that's what I like that we're doing. We develop strategies here, And we look at strategies that people have already proposed, and we go, is there a way to kind of tweak it a little bit, make it better? I think there is. I love, especially now when the market's falling big, I love selling calls and getting free money on something that I'm going to hold anyway. Now, when we go back to Raging Bull, right, and it's the Raging Bull market again, and I think we're probably in a bear market now, but when we go back to Raging Bull, will I be selling calls all the time on my core positions? Yeah, probably not. But I kind of feel that we're in a bear market now. I love what Tom Sosnoff said the other day. Here's how you tell what market we're in. When every rally is met with a sell-off, you're in a bear market. You're in a bull market when every sell-off is met with a rally. So right now, every rally is being met with a sell-off. When that ends, we'll be back to bull market. I don't think we're there yet. I think we are in a bear market. So in a bear market, it behooves me to bring in $1,200 a week by selling calls. I love it. Love it, love it, love it. So you all should be excited, because now I think we got something to where, you know, you can just be at your office. You know, I'm gonna look at it 4 times a year. I don't do anything, or you can be, you know, as involved as you want to be. What do you want to do? I'd be hard pressed to say the best. If you said, what's the best? I do the 45-55, and I do the 1-1-1s. Black swan hedge is good. You know, toss them in there. But if you don't want that risk, if you don't want the risk on doing a black swan hedge, I got it. Why take the risk on of selling that naked component of a black swan hedge? If you don't want to take on that risk, especially when you've got triple X leveraged, you know, UPRO or TQQ. Why take that? Now it may be more advantageous to put the entire tranche on, an entire 3-5 short push, long push. Yeah, well, whatever. I think this is exciting. Very exciting. So anyway, hope you've had a good, and hopefully we're back to normal this week. Wednesday, I do have a meeting I got to be at out of town, so we will not have a session on Wednesday. Ken, if I'd love for you to do sessions, if you want to do one on Wednesday, or you want to do one 5 days a week, Ken, do it. The floor is yours, baby, anytime. You just want to.
Well, Bobby, right now, I'm essentially blind, so there'll be no more output for me for a while. Fact is, after I'm not even trading right now. I'm exiting trades. Since I brought up something that's unpleasant and not cool, there is it's coming back. I have to have some surgery to get my vision back.
Good.
So, but for right now, I'm minding my own business and kibitzing and studying. I can't even see. I can hardly see the screen to put in trades. So rather than put it in a fat finger mistake, it cost me a lot of money. I'm just gonna stick my money in something that makes income easy, like dividend stocks. And I am doing the AIM. I'm not getting out of the AIM.
Yeah, good. Well, you're in our prayers, Ken, and I know if I know Ken's going to do all the research he can too on finding things that are going to help you, help your side as well on a natural end. So
yeah,
Ken's got me on.
I'm already doing that stuff.
Yeah.
So
Ken's got me on all kind of great supplements and stuff, and everything's doing good. Everything's doing good. Let's see what my blood sugar is while I'm right here. Let's see. Check it. Now, I did have a Rice Krispie treat this morning. Let's see. Yeah, it's 160. Okay, I gotta, it's about time for me to do something else here. But that's pretty good. I'm staying in the lower numbers. All right, guys. Hope y'all have a wonderful, wonderful day, and I will see y'all tomorrow.